Good afternoon, my dear students. Welcome to the Vijayawada branch of SARC of ICA and Vijayawada branch of SICASA for the lectures on accounting. Today we have a very good resource person with us. She is Hiranmayi ma'am, and she is a faculty in the Pondicherry and other branches also. She is the daughter of our renowned Professor Venkat Shivakumar Garu, who is also taught costing to you in marginal costing and standard costing. And now that her daughter is getting the reins of her father, and she's now going to teach the accountancy for you. She's going to start a bit slow. Once she given the 2-3 days of the course, and then she would like to improve the same and then confirm the same afterwards the very important topics also. I request each and every one of you to make use of this opportunity. I request our SICASA chairman Ravi Kishore Garu to kindly introduce the resource person and go ahead with the meeting. Thank you.
Thank you, Chairman GSR sir. A very good afternoon to everyone. Let me introduce to you today's faculty, CA V.S. Hiranmayi. Her motive is to develop an inspiring environment for empowering students with knowledge and also to enable understanding of the most difficult topics with ease. Her areas of expertise include as a committed teacher with an experience of 6 years in the field of teaching the CA and CMA students. She handled CA CPT, CA IPCC, and also CMA, including level 2. For CA CPT students, she taught accountancy and mercantile law for the last 5 years. Of course, for 5 years she has taught. She has taught students from the year 2009 to 2014 with the Udupi branch of ICA as well as Chennai branch, and also private institutes at Bangalore. And also 4 years for CA IPCC accountancy with the same Udupi branch and also a private institute at Bangalore and Chennai. And she also taught CMA accountancy in private institutions and also the CS executive course for 1 year previously. Her personal skills include analytical ability to comprehend practical cases and relate it with the theoretical aspects, helping the students to easily cope with existing functionalities of the profession. Teaching skills to sustain composure under most strenuous examination conditions, explain and communicate with clarity, and make teaching most interesting. She has completed her CA and CWA courses. She was a ranker in CWA final as well as intermediate course. In final, she stood All India 9th rank, and at intermediate level, she stood at a 14th rank All India level. Her achievements include she was elected as All India Youth Leader with an opportunity to speak before Honorable APJ Abdul Kalam. She was elected as the school head girl and also been awarded the school's best student for 3 consecutive years. She is being in teaching field for the past 5 years, having taught more than 800 plus students at both CPT and IPCC levels, and also for professionals pursuing the CMA strategy level course. She assisted in authoring books for the IPCC and CPT levels. She acquired training in classical dance, keyboard, badminton, karate, UC mass, yoga, swimming, arts and crafts and music. She is versatile with English, Telugu, Tamil and Hindi. Her hobbies include reading books, playing badminton, spending time in old age homes. I present before you CA Hiranmayi, who is the daughter of a renowned teacher before you, and I request all of you to take advantage of these classes and enrich yourself. Over to you, madam.
So yeah, welcome to my the Vijayawada branch of SARC. So I'd been given this opportunity to do service basically to the students and to give my best in whatever I do. So I firstly thank the chairman Garu for giving a very, very long introduction about me, but I think it was a 5-minute long thing. But one thing that is sure is I would like to have the thing is my purpose of me coming and teaching or taking sessions is I just wanted to be accessible and also make the subject that I teach to be much more interesting. So that is the thing. And I thank both of you because you've given a really brilliant introduction and such an elaborate introduction. So everybody know me in and out. So post after your introduction. So yeah, I will be handling the subject that I will be teaching you is accountancy. And again, accountancy, when we talk about accountancy in the intermediate course, it is actually one of the most scoring area. And as you know, because so many of them would have actually told you. So when you check out with accountancy, it is one of the subject where you can score the maximum marks so that you will be able to maintain your aggregate and your overall score. So this is what everybody would have been telling you till date. So that is what even I am here to tell. But actually there will be a difference. So once after you start attending the class, so I am here to actually give you two things that you will be able to take away from my particular session. So the first thing is you have to be conceptually clear. So I'm here since when I have been a student and then now becoming a teacher. So I was a teacher while being a student also. So I just can understand the pulse. So where a student will be able to find it difficult, or where is it that we need to stress, or where is it that they will be needing the guidance. So that is how we'll be going about with it. So the two takeaways that we will be doing or you will be learning out of this particular session is mainly, one is the conceptual clarity. I have seen people if you don't have, or if you learn the subject only for the purpose of writing the exam, of course you have to pass the exam. So that is one way of it. And the second way of it is if you want to excel in the subject, so you will have to always if you have to excel in the subject, then you will have to always learn it conceptually clear, so that if any other adjustment or any other real life practical issue comes up, when you are strong with the basics, it becomes actually very easy to develop from there. So that is point number one. What is the second takeaway that you can actually expect out of my session is, while teaching you the concepts with conceptual clarity, I will also be dealing with how you have to write it under the examination conditions, which is actually very, very important. The students today, they have this issue, students who actually come up with me giving several attempts, they just tell me only one thing: ma'am, we don't know still where we are lacking as to. That is one thing that I have found as a common fact, or as a common point that students keep telling to me. So my focus entirely would be, first thing, to make you understand, and at the same time I would also concentrate on such things that how you have to present your paper in such a way that the examiner is able to understand what you have understood, and also you are able to pass the examination. So these are the two things that you can expect out of any session, whatever the classes I'm going to handle further. That is what you can expect out of it. That's the first point. Second point, so what are your topics? So what are you handling? So yeah, now I will be handling the module 2 of the accountancy course of intermediate stage. That is your module 2. Okay, so module 2 has from chapter number 4 to chapter number 8. So this is basically your company accounts. So before we could start, so there are various chapters in that. So I have just chosen the chapter number 5 of your module 2. If all of you can see wherever it is being, the link has been shared with you on the portal where the video is getting played now. So I would request, not now, please don't distract yourself. I would always request you to first have an understanding of what is going in the class. So if you are with me, since we can't create a live environment here, so I would always request you to be on par with me. Just listen to me. Just keep your ears open and also try to concentrate so that you will be on par with me. And when I want to like work out the questions, I will ask you to go through that reference material. So I think this is fine. And yes, the second most important thing, how will you teach? The first thing is what I told you is what you can expect out of my sessions. And the second thing, which is the most important thing, is what will you teach? What is your material, madam? So will you give me an additional material? So should I solve so many sums and all? So yeah, it's a very valid thing, and you will have to know, because how I will be teaching is something that you should have first understanding and the clarity on how the class will be progressing now. So first thing is I will be going with the institute material. So what I believe is in whatever stages I teach or in whatever classes I take, I go always with the institute material. So this is one thing that I believe in, is like you have to first have the conceptual clarity and solve all the illustrations, examples, any practical questions that is given to you behind each and every chapter, so that you are first confident about the concepts. And then the second approach is, by the time I complete each and every chapter, I will be picking up the papers. Like I will take past question papers of say 5 attempts, and then I will try solving. I will see where the questions have appeared, and I will also tell you the easy methods, how to remember, how to present under the various tension-driven examination conditions. So that is how we go about with it. I am not going to give you any other material or something else from the outside. Let us first learn and then become experienced of what is given to us physically. And then we can go to the next levels or materials or pull it from the different areas. Yes. So with this background of how I will be teaching, what you can expect from my teaching. So I think we can start off after all the introductions and everything with the subject that I'm going to like take. So yeah, we are going to start off with chapter number 5, profits or losses prior to the incorporation. So that is the topic that I will be handling today for this session. So I'll start off with that. So the first question is, when you read the heading of any particular chapter, it itself in it says so much. So there is something that you will have to assimilate and break down to understand. That is very, very important. So the first thing, what will you understand or how will you break down to understand is profits or losses prior to the incorporation date. So we have a lot of words that we have to check out now. The first one is the profit or the loss, correct? So being an accountancy student and coming to the CA profession, we are as of now very well versed with what you mean by a profit, what is a profit in a business, and what is a loss in a business. How will you deal with the profit? How will you deal with the loss? Correct? So can I just give you a fast recap? So profit or loss is something that every business would want to know. Like obviously, if you start a business today, you put in money into the business. Obviously, why will you put money into a business? Because you have an idea and you know that will fetch you money. So you are putting money into the business. You have an idea, you create a product or you create a service, you find out the market, you sell your product or the service to your targeted customers, and then you earn revenue out of it. So can you do it individually? In some businesses, of course, yes, you can do it. But in some other businesses or in most of the businesses, you will have to hire people who will work for you. So in case you hire people, then you will have to have an office set up. You will have to incur various other expenditures, correct? So the various other expenditures can be of different natures. The salaries that you pay, the rent, the electricity, and the other overheads or the office expenses you will have to incur, as against which you will be receiving the revenue out of the sales of the product or of the service. So finally, you will have to know, so much money I have received, so much money I have expended, so what is remaining with me? So such a statement, when you draw in your accounting terms, based on your accounting standards and the accounting principles, you draw a statement, so which is called as a profit and loss statement. So in this statement, as you all know, it is your incomes and all your revenues on which side? It's on your right hand side. And then all your expenses on the left hand side. And then you balance it to arrive at the profit or loss. So are you clear? Like, it is a very easy explanation, but I just wanted to start so that you will be able to understand. Profit or loss is the balancing figure out of your P&L account. That is, revenue minus the expenses is what the figure that you get at the end. If it is positive, your revenue is more than the expenses, then you get a profit. If your expenses are more than the revenue, then you end up in getting a loss. So is this clear to you? Now let us again go through the topic, that is profit or loss prior to incorporation. So the word prior says before. Good. The next word that we need to actually understand is incorporation. Brilliant. So we are actually entering into the subject matter now. Talking about incorporation, and I am here to basically teach company accounts. Yes, so incorporation is the word, something got to do with a company. But what is incorporation? How do you understand incorporation? So in order to understand this word of incorporation, you need to have some background, or we need to go and revise the basic steps of formation of a company. So when we talk about incorporation, basically we will be dealing with the company. That is the crux of the word incorporation. When I tell company, so what do you understand? Company is a legal entity with a separate existence. It has to be registered. It should have a common seal, and all these are the definitions we have learned till date. Correct? Yes, of course, it is right. So now when we go further as a step ahead, since we are in the intermediate course, so we'll have to learn a little bit, an extra thing of whatever it is. So then we come, what are the steps in formation of a company? If you think like this, can you start a company today? Can you think and do it like this? No. There are a few set of rules and regulations which is actually put forth under your law, which you have to comply with before you can go with or you can start a company physically. And that is very easy. Today, I have a brilliant business idea. Have you heard of all these people, like they say, visionaries? These are the people who create ideas. So they are the people, right? So there is one person who is behind or who has an idea. And this idea can be converted into a business with right amount of the resources with them, right? So then we now progress. Who is this person? Why should he do? Obviously, I have an idea. I want to convert it into a business which will be in turn benefiting thousands of people. Thousands of people I can employ. The economy, based on the revenue pattern, the economy, I can even contribute to the economic aspect. So I can contribute to my society. So that is how an idea gets transformed into a business by one person. And that person is called as the promoter. So what is he called? Promoter. The step one in the formation of a company is what? Is promotion of the company, which is very, very essential in today's world. Having an idea alone is not enough. You should also get the right platform, and you should also get the right resources. It is only then your idea gets a practical shape and your business is born. Your business comes into existence only then. So step one is the promotion of a company. Is this clear? We go to step number 2. So what is the step number 2? It is registration of the company. So registration of the company, okay, you need to go and register somewhere, right? So what is this somewhere, or as per what I have to get registered? The second step basically says you have to comply with the law. What is the law? The Companies Act. So which is like a written document. So it is like your complete, like say Bhagavad Gita, Bible or Quran, whatever you call. So if a company has to come into existence, it has to follow the given set of the prescribed rules under this particular law, which is the company law or the Companies Act. Okay. So then comes the registration. So in registration, what you should do should be the next question. It's generally you have a set of documents, the memorandum of association, the articles of association, and certain other documents which is required based on your nature of the business. And then you will have to register it. And then what happens immediately when you go submit the documents, to whom should you submit the next thing? Registrar of companies. Suppose I'm a person in Chennai. I want to open a business in my nearby area. I have to find the company or which registration does it come under, the ROC of it. I have to go there. I have to say, sir, I want to start. These are all the forms you've asked me to fill. I filled all the forms, so I'm giving you the forms. Now, please see that my company is registered. The moment you give all your documents to them, immediately the company is not registered. The registrar of companies, in turn, what will they do? They will start again viewing, checking the documents, doing everything and redoing it, whether cross-verification, all that. And finally, they will grant you your registration. Granting the registration is a very easy step. They say, okay, everything is okay, brilliant. So the company can go ahead and you will be recognized as a company from today. So today's date is 4th June. So if suppose I am the registrar of companies, the head, they're sitting there and I've done okay. So I make a signature on the papers that is submitted. So immediately what happens? The register which is maintained in the registrar or with the registrar, your company's name will be entered into that. So technically a company is born on this date. So we move on to the step number 3, which is incorporation of the company. So technically, a company is incorporated on the particular date when it is being sanctioned and its name is being entered into the register. And then subsequently, on doing this step 3, you will be receiving a certificate of incorporation. Clear? You will be receiving a certificate of incorporation. Are we clear with the 3 steps? The first step is promotion of the company. You bring up a business idea. A person brings up a business idea. And with the business idea, he starts finding out the resources that is required to convert his idea into a business. So that step is called as promotion. And the person behind the idea is called as a promoter. For a company to come into existence, it has to comply with the law. The law that governs all the companies, be it any type of a company, is the Companies Act. So you need to get registered under the Companies Act before you, or for you to get or take birth as a company. So the step number 2 is registration. What do you mean by registration? So registration is a different set of documents as prescribed by the law. You will have to fill up everything and see what is relevant to you and then submit everything along with the prescribed fees to the registrar of companies under which your company will be coming, the area under which your company will be falling into. And after doing with the registration, once after the registrar is satisfied that you have complied with all the law, all the conditions laid down and the necessary forms have been submitted, and then he will make a note of your company's name into the register, and that is when the incorporation actually takes place. Now there are majorly 2 different types of companies, public company and a private company. Now you might ask, madam, are these 3 steps enough so that we can go ahead? Yes, these 3 steps are enough if the company is a private company. But if the company is going to be a public company, there is one more step. So there is step number 4, which comes into picture, wherein the company should get a certificate of commencement of the business. What is this? It is called as certificate of commencement of the business. Why, madam? Why should we actually wait? Now though the company has come into existence, so I can go ahead, right? So that's the doubt. But where in case the public money is involved, the law to be a little more stringent, the commencement certificate or the commencement of business certificate should be got by the company before it can actually start. So it is like a safeguard measure given to the investors by the law again, and that is why they will have to wait. So is everybody clear with all the 4 steps? The step 1 again, to repeat, is promotion of the company. The step 2 is registration of the company. Step 3 is certificate of incorporation from the ROC, and then the certificate of commencement of business. All the 3 steps are common for both public as well as a private company. But a private company can start doing the business once after incorporation itself. But the public company has to wait till the business has commenced. That is, it receives the certificate of commencement of business. Only then it can start doing the business. Clear? Any doubts with this? So now when we understand the topic, profits or loss prior to incorporation, you can then ask me a doubt. Our company itself is not there. How, madam, we can do a business, or how can we earn profits or losses before a company has come into the existence? I say, why not? So all the situations that you will be dealing as chapters are all practical issues which were earlier that came up in the situation. And an accounting treatment for the same has been prescribed. So what do you mean by prescribed? So a set of accounting policies, everything have come into place, and they have told this is how you will have to deal with such a situation. So this is one kind of a situation wherein now though we will have, or we will say, madam, in case of a new company, we don't even know, there is no company at all. So before a company can come into the contract or into existence, how can you even have a business, madam? That is what you say. And there is a rule in your Companies Act, there is a section which says any agreement or a contract entered into by the promoter on behalf of the company before incorporation. Clear? Where the promoter enters into any contract with for any business purpose or for the benefit or whatever it is, on behalf of the company he enters. Then once after the formation of the company, it is in the hands of the company whether the company will accept the contract or it will not accept the contract. If it accepts the contract, well and good. It will come on behalf of the company and you can account it for the company. If it doesn't accept, it will be the personal liability of the promoters because they have entered, right? So they didn't ask the company. So now the company doesn't want it. So what will happen? We'll again go back and the liability will be falling on the promoters. So this is in case of a new company. So when I talk about such kind or the topic profits or loss prior to incorporation, majorly you will be finding a business is being taken over. So now we are entering into the crux of the subject. What is this? We are now going to see the situations, or mostly the situations will be in such a way that an existing business is already there. And now people want to take it over. And after taking over, what will they be doing? They are going to change the composition if it is in another form of a business. They're going to change the form into a company. Correct? So there will be a time lag. Immediately, if I take a business today, tomorrow itself nobody is going to register. So there will be a time for everything or for every process. So within this time, already the business is established. Now you want to take it, you want to convert it into another name, into a company. So this will take time, correct? But already you have customers. Already it is an established business. So you ask the customers, no, you please wait. ROC will give me registration. Only after that I can do, because that is the valid birth of the company. After the birthday of my company only I am going to do it. So can you tell them that? No, you are technically not supposed to. And if you tell, you will lose business. So that is there. What you have to do instead is, that is where this particular topic comes in. So what happens is, during the period, that is the period prior to incorporation, if there is any business that is carried on, yes, before the company comes into existence, the business is carried on. Obviously, if I carry on business, I will have income. I will also have to do expenses, right? So everything will be there, correct? Once after the date of incorporation, it becomes a regular and a normal company. What it becomes? After the date of incorporation, a company comes into existence. So from then onwards, what is the income received? What are the expenses that is being made? Everything gets accounted as your normal accounts. That's all. How do you do your financial statements? How do you do your final accounts? The same way it gets accounted. Now in the entire chapter, what we are going to see here is, how do you, first step one, again everything is 2 steps. First step is, how do you find out what is the profit or loss made during or before incorporation. That is step 1. How will you attack these kind of problems? First thing is to identify or to determine what is the profit or loss prior to incorporation. So that is how the first step has to be dealt. Step number 2, I have identified, madam. So I have got a pre-incorporation loss. I have got a pre-incorporation profit. Now what do I do with this? Ultimately, after you find out the solution, you have to implement it and bring it into your normal life. Otherwise, the solution will have no meaning. So even after finding out how you have identified or what is the profit or loss, the next step is how will you treat it in the books of accounts. So the next step that comes in here is how will you treat it in the books of accounts. Is this clear? The introduction, I think it's a bit elaborate introduction like my introduction, but I hope that it would have at least touched upon the few topics that you had earlier learned or somewhere you have learned till date, and then you understand why you are supposed to do this, correct? When a business continues today, you are appointed as an accountant for a company. So this company, you come into the position as of 31st March 2020. Okay. No 31st March because there has been a very thing. So you were appointed much before on 1st February 2020. Good. Now it so happens that the company, the managing director calls you and said, he says, you have been a very big CA and all the things I have seen, very good. Now the company has an issue. This was earlier, erstwhile, it was a partnership firm where 2 of my friends were running. Okay. And now what happened? I took the business from them and I became the director. I purchased it from them. I became the director. And from then on, the company is existing. Like this company has come into existence correctly during last year, August. So what he says to you? He says, last year, August, the company has been physically, it came into existence. That means he's meaning certificate of incorporation was granted to you on 1st August. Correct? Certificate of incorporation was granted to you on when? As per your managing director, he says, 1st August, the certificate was granted, madam. You say, okay, sir, then what is the problem? No problem. So from 1st April to these are the things I will be doing it. You will say. And then he also gives you another information. He says, ma'am, I have taken over this business as partnership from them before itself on 1st of April 2019. So he gives you another development. He says, madam, even though company came into existence on 1st of August, for your kind information, the company was existing. This particular business was existing in the form of a partnership. And that partnership, I took it from them on 1st April itself. So from 1st April till that 1st August, I was doing business, madam. So I also have that detail. So the revenue, the income, everything also I have the details. And after 1st August also I have the details, madam. I will give you everything is what he says. So technically, if your foundation like is very strong in this particular chapter, then you will identify, this is one thing that we learned in the accountancy intermediate. So this is a peculiar case of a profit or loss prior to incorporation. Oh, brilliant. So I know this, I've scored, and the teaching and all was very good. So I will be able to handle this. So that is a real life situation when it comes to you. So anything and everything that you are learning in your theoretical days or in the days of being a student, everything will have a relevance. So how you apply the knowledge practically is where you stand as a chartered accountant or a successful chartered accountant. So that is how every particular theoretical chapter has to be understood. Conceptually, clarity has to be there if you have to hold things for a longer time of period in your memory. If you do by hearting, one of the most major problem I have seen, not only for saying the students foundation, to okay, by heart mein to chalega, it will be there, okay, it will be fine. But once you come to the intermediate level, that has to come down. Your conceptual clarity and understanding of a subject has to increase manifolds. When you come to final, trust me, you can never by heart anything. Because what they teach in the class and how the examination questions are being asked is purely to detect your practical ability. That is how your real life situations or your professional life is going to be once after you qualify. your chartered accountancy course. Is this clear? So I will be here definitely not to advocate the principle of by-hearting, which I'm actually, I'm not for it. So I will be giving you a conceptual clarity where you're able to like, you're not able to follow. I will be going because there are people like few people who will be able to like, I'm able to see them on the screen. So if there are something, few doubts that is asked, so I will pause and I'll be able to explain. But for the viewers who will be listening or going through the broadcast after, say, the live session, all your doubts will be explained. So I know the possible doubts where it will be like where you will be stuck up at all. So I will be able to like explain everything to you. So it will be a very easy thing for you. Is it clear? So yeah, because I'm used to this live sessions, is it clear, and having a lively interaction. So it is like I'm talking to myself now. But yeah, since this will have a wider reach of students, many of them will be benefited. And I hope they will be benefited. Okay. So now we get into the subject. Like we start understanding, till now we had a brief introduction of what do you mean by profit or loss prior to incorporation. To have an understanding of that, we understood what is profit, what is loss. Prior means before. And then incorporation. So what is incorporation? So we started from the word incorporation will apply only to a company. That means we understood a company has to be born. A company has to come into physical existence. Only then the concept of the incorporation will come into the picture. Clear? And then I had given you examples. You will ask me, madam, new company, how? Not possible. Correct. Not possible. It will be, I told you, I quoted that particular law section which said ratification of the contracts, preliminary or pre-incorporation contracts should be done or it can be undertaken by the company. So that in itself is separate. So the topic that we are discussing today is where a existing company in another form is being taken over. Correct? Is being taken over. And then what happens till the time of incorporation, till the company is being registered, till that particular time, if it is an established business, you cannot ask your customers to wait, which will result in a fall in the revenue, which will result in the goodwill being affected. So you don't have any option but to continue with the business. Once after the company is incorporated, again the company continues the business from then under a different name. Correct? So then this concept becomes very relevant. Like how do you find out what are the profits or losses, step 1, and then how do you account for such profit or loss which you have found out is the step number 2. So these are the 2 steps that you will have to understand at the end of the session. So we go to the step number 1. So what you are supposed to understand in the step number 1, how will you ascertain the profit or loss? So how will you ascertain the profit or loss during what? Your pre-incorporation. So before you understand the topic, you need to understand how a question will come to you. Correct? Only then you will be able to know how should you solve the question. So these kind or this chapter technically or specifically has got questions this way. It will be given in the first few sentences, they will tell you, or they will be telling you the periods. What will they tell you? In the first few sentences of the question, you will be able to identify the one major critical point is when the company has been incorporated, which means there will be a date when the company had come into existence or from when the company has been taken over. And you will also have details with regard to the incorporation date. And the third most important detail is when there is a closure of the books. So what are the things that you need to understand from the first step or step 1 of when you solve this particular type of a question? What you need to identify from reading the question is the 3 things. Correct? First date will be taking over the business. What it will be? The date of business takeover. This is the date number 1. Clear? First one is taking over the business. That date is very, very important. Next, what is very important? The date of incorporation, which is the crux of our particular chapter. The date of incorporation is very, very important. Clear? So there are two dates that we have learned. What is the third thing that you need to know? Closure of the books. This is date number 3. Clear? When you are going to read a question which comes from this chapter, you are supposed to understand the 3 dates, which is as follows. The first one is, when you read the question, there will be information which says, a so-and-so business has been taken over by a person who wants to convert it into a company, and he has taken over the business on a particular date. This is the first information that you will have to get from any question. What is the second and the most important information? In the dates, you will have to check for the date of incorporation of the company. That becomes very, very essential. So the second one will be when the company has been incorporated. That is how you will find out this particular date. And what is very important, the third and the final part is, when are the books of the company getting closed? Which is your normal thing. So you know what is a calendar year and what is a financial year. Calendar year is 1st Jan to 31st December. But being an accounting terms and accounting professionals, we are always given with another year. Then we have the financial year, which starts from 1st April to the next year, subsequent year, 31st March. Correct? So anything can be the closure dates. For them to test you in the questions, not required that always you will have to have only the financial year. They can also give you the calendar year too. So based on the question, when you read the first 3 lines, you must be able to identify these 3 dates. Is that clear to you? So when you read the questions, you might ask me, Madam, where will I write? Will I write Kuppali like this? Like very shabbily? Should I write it like this after I start reading the questions? No. So how will you write it? So initially, when the starting of the session, I told you, I will be teaching you the concepts and also the presentation of the concepts clearly. Like when you go to the exam, this is how you will have to do. So till that gets inside, so I'll be repeating it few times, not several times, few times. Okay. So now coming back, once after you make a note of this or you identify them from a question, you will have to go to something called as the working notes. What is that? Working notes. So coming back to the topic of working notes, I would like to deviate a little and then again come back to our chapter. As far as accountancy subject is concerned, the thing is it works out like a math. So it's like maths. Maths is using numbers, correct? So accountancy also uses numbers. Wherein, that is why I told you it is a scoring subject. If you are well versed with how and what the logic is, you will be able to solve it. But that is not all. Even if your answers are right and you have written the answer in such a way that only you are able to understand from reading out the question, it doesn't work out, correct? So the person who has to clearly understand is the examiner. So who corrects your paper technically. So for things to be made easy for you as well as for him, presentation is very, very important. So in accounts, what I advocate is you have to give a lot of working notes. Here in accounts, you will have to give a lot of working notes. Your logic might be different, but the answer might be logically different. But wherein you give a working note saying, I have considered so and so to arrive at so and so thing, then you will be actually given the step note. So the moment that you are looking or you want to like improve on your presentation, the first thing that you will have to strongly put it into your heads is that working notes are compulsory. When there was CPT form when I studied, so from the CPT form coming into IPCC, we found it a little difficult because we were all writing board exams. So after board exam, we were with us for that 2 to 3 months. Okay, tick, 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 finish. There is nothing to write. There's nothing to bother about the time and nothing of that sort, right? Then what happened? We came into IPCC, and then when we started writing IPCC, it was like literally breaking our hands because so much we had to write and time also had to be maintained. So that is one thing. But now what I find a plus is that foundation course has come again, wherein it is making everybody what you write. So practice of writing is very, very important. So as far as accounts is concerned, you will have to have working notes perfectly for a 4 mark sum, for an 8 mark sum, for a 16 mark sum, or a 12 mark sum, whatever it is. You should have working notes except for 1 mark. Okay, working notes are not required for 1 mark. But when it goes as the marks increase, working notes are expected. Wherein, when you start the question and read the question, you make note of it, everything in a working note. So you will ask me the next question, madam, by understanding or reading the question itself, how will I know as to how many working notes are required or what working notes are required? This conceptually, if you are clear and confident by solving a minimum number of questions related to the chapter, you will be able to get a hold on the subject. So you will know, okay, chalo, this question number 2 or 3, it has come from profits or loss prior to incorporation. Okay, step number 1, working note number 1 should be this. Working note number 2 should be this. Then working note number 3, look into the question and read. That's all. Okay, these are all the working notes. Then comes your main presentation. And one more mistake most of the students do is they will do first the working note and then they will do the presentation. That is also acceptable. You can do it that way also. Not. But you tell me as an examiner tomorrow you're going to sit and start valuing your own paper. So first who will be or what you will be interested into, okay, what is the answer? Correct. Nearby somebody has got no. Fully perfectly correct? Yes. So it might be that. So first they would like to look into what is the answer. Anybody has that curiosity, even you and me. So leave alone about the examiner. So everybody has it. So what do I prefer or I tell the students is, rather than making them go through all your working notes and then finally the answer, revealing the suspense at the end, you tell what is going to be the ending. And then the working notes follow. If in case your answer is wrong in this first step, like say, first step until like when you like look at the answer, 20,000 should be the answer versus 20,200, let us say that. The examiner will get a feel, okay, let us look into what are the working notes. So for that you should have working notes, right? Everything in the brain I will do, or rough sheet in the exam I will do and scribble and throw that rough sheet. No, everything has to be documented. So as an auditor, you have to document everything right from your examination itself. So your working notes speak of what is the knowledge you have acquired. And always having working notes and writing in relation to the working notes is very important. It's not like working notes you write like this and you don't even give a relevance, like you don't even mark it to the answer. Then it will not make any sense. Suppose you say working note number 1 says these dates. So with these dates, there will be something that you have to solve in the question. So you will say working note number 1. When you go to the final answer, when you present the final answer, you should say in the brackets working note 1. You get my point? The relevance of the working notes which should always be given in your answer. Either ways it will remain like that. Correct? Because you don't have your name. How should I call you? I should call you with what is the color of the shirt or the dress you're wearing. Now the new normal is you have to call with the mask, color of the mask, what you're wearing. But technically, if that is not there, if the naming is not given, then there will be no purpose served. Working notes is okay. My teacher asked me to do, so jollily I work out the working notes there separately. In your answer, final presentation, this is my final presentation, this will be like this only. No, there should be always a relevance mark to your answers. Only then it will make sense. Only then it will complete a question. Is that clear? So I'm stressing not only for this chapter, for any other chapter, you learn it from any other teacher, you learn it from any other material or from any other source, everything is fine. But when you're going to present it in the exam, always, 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 please have the habit of writing the working notes and giving a reference to the final answer. Only then your presentation will look neat. You will have the conceptual clarity. Examiner will understand what you have understood. And finally, you will be getting marks. Madam, my handwriting is not neat. Nobody understands. My handwriting, though, is also not neat. But I have cleared, right? So that itself answers your question. Is that clear? We had a little deviation and then now we have come back. So anybody who's watching my session, I will tell you to clearly first go to leave your first page for the answer, go behind and then start doing the working notes. As and when I start reading the question, I will be telling you to make what are all the necessary working notes. So after the end of solving 2 questions, you will definitely know what are all the working notes you require to make from the particular chapter, from any chapter that is being handled by me. Okay, is that clear? So from there, we come back now into the subject. So where were we? We were discussing about how do you understand the concept. So before I give you the conceptual clarity, I'm just telling you as to how do you attack the question. Correct, no? Now first you understand how to attack the question, and then while we do the questions, when you start reading the question, it becomes very, very easy. First, if you are thorough with the particular working notes. So first step is to understand how to calculate the profits or losses during the pre-incorporation. So that is the first step that we are trying to hit. Clear? So in this kind of a problem, or in this kind of the questions, you need to do two major working notes. The first working note is this, which is called computation of the time ratio. What is this time ratio, madam? So here where the subject comes into picture, which is finding out, working note number 1 will be finding out the time ratio. So what is time ratio? How do you calculate time ratio? You will have to find out 3 dates. So what are the dates? Can we have a look at? Taking over of the business. From when the business has been taken over by some other person, and this person wants to convert it into a company and then continue in the form of a company. Correct? So when he has taken over, first point. Second date, or the date that you have, or very important for this question, is date of incorporation of the company, which is very, very essential. And third date, of course, if that date is not there, then you cannot proceed. What is that date? It is closure of the books. So working note 1 should contain what? It should be for finding out the time ratio. To find out the time ratio, what are all the dates that you need? 3 dates that you need. One is the starting date. The other one is the mid date. The other one is the last date. Starting date is the date when you have taken over that business. The mid date is the date of actual incorporation of the company. And the third date or the last date is, what is the last date? It is the closure of the books. So you are closing the books of accounts. That is very, very important. Clear? Any doubts with how do you compute the time ratio? And I had given you my example. In my example, I had given you, so today I'm getting appointed on 1st February 2020. I'm getting appointed as the accountant, chief accountant of a company. So my manager or my managing director, he calls me and he tells me, madam, you have come, very good, congratulations, but we have an issue to be dealt. I have taken over this business from one of my friends, and that business is now converted into a company, and I am now running this company. You will have to help me with how do I account for everything. Correct? So then what will you ask? Sir, wait, working note number 1. What is my working note number 1? Computing the time ratio. So in that, what you have to first question or ask your managing director, you have to ask, sir, what is the date on which the business you have taken over from your friends? He says, madam, the first date or the date of taking over the business was 1st April 2019. So what does he say? Madam, I have taken over this business on 1st April 2019. So you say, okay, sir, first thing filled. What is the second thing? When have you received the certificate of incorporation from the ROC? Sir, incorporation date, when? That is what you ask. He says, madam, incorporation date is on 1st August 2019. Cool. So August is a very good month. So 1st August 2019, I have got the incorporation, madam. Okay, sir, everything is fine. I have been appointed as on February 1st. So now tell me, when do we close our books of accounts, sir? Is it a financial year or is it a calendar year, sir? So he says, no, madam, we follow only the financial year. So we are supposed to close our books by 31st March 2020. Clear with these 3 dates? So I have given you some example for you to have a better understanding, wherein you have arrived at date 1, date 2, and date 3. Starting date, taking over of the business is on 1st April, and then the incorporation of the business as a company is got on August, and then finally the date of closure of the books is in March. That is on 31st March. Clear? Now your exercise starts. After getting this particular dates, what should I do, madam? Please tell me that. Correct? So now you have to ascertain how many number of months are there in total. Correct? How many number of months are there in total? And in that total, how many are pre-incorporation months and how many are the months left after incorporation. I repeat it again to you. The working note number 1, or the first working note that you prepare for this kind of a problem, is calculation of the time ratio. The time ratio to be calculated, you require 3 dates which are important. The first one is the date of taking over of the business. The second one is the date of actual incorporation as a company. Third one is the date of closure of the books. Is that clear? Date of closure of the books. So I have classified it as date 1, date 2, date 3. Clear? Date 1, date 2, date 3. Now we go into the next step of finding out how many total number of months are there. So for finding out how many total number of months are there, we have to do date 1 from date 1 to date 3. We have to find out what are the total number of months. So we will write total number of months. How will you find out? It is nothing but date 3 minus date 1. That's all. When did you take over the company? That is the relevant date. And when is the date you are closing the books? That becomes very relevant. So here it is from 1st April to 31st March the next year. That means how many months you have? You have 12 months. So totally how many months you have? You have 12 months. So to find out the total number of months, to find out the total number of months, it will be the first date 1 and date 3 you have to consider. So date 3 minus date 1 will be the number of months. In my example, it is from 1st April I have taken over the business and I have continued doing it till or closure of the books happens on 31st March. So there are 12 months in between. Correct? So there are how many months in between? There are 12 months in between. Good. Now, out of the 12 months, the major exercise comes where? It comes here to find out how many months come in the pre and how many months come in the post. So, what do you mean by pre-incorporation? The months or the period before incorporation. So, where is incorporation coming? Correct? Where is incorporation coming? Date 2. So, on 1st August, you have incorporated the company. So, before 1st August, all these months will be called as the what? Pre-incorporation period. It will be called as the pre-incorporation period. How many pre-incorporation period? The next thing that is very, very important is while you count the number of months, you have to see if the months is on the starting date or on the end of the date. Clear? Here it is from 1st April to 1st August. So April, May, June, July, August. I consider August also. No, that is the mistake most of them make. That is under exam conditions when you are under stress. To solve the question fast, you will miss sometimes. So this is one silly mistake that you will be making wherein you forget to see whether it is a 1st or 30th or 31st of a month. So that you have to be very, very careful. In this example, April 1st. So we consider full month of April. Then we consider May, June, July. July 31st is considered. And the company has come into incorporation on 1st August. So 31st of July and 1st August are both in the same. So that is why we consider how many months? 4 months from April to July 31st. Clear? So pre-incorporation is 4 months. Any doubts with this? Pre-incorporation is 4 months. Able to see? Okay. Pre-incorporation is 4 months. And then the remaining period, total how much? 12 months. You can do it 2 ways. Total is 12 months and you found out what is pre-incorporation. So when you separate both, it obviously is post-incorporation. That is one way of doing. The second way and the easiest way of doing is simple. Out of the 3 dates, the first 2 dates will always give you the pre-incorporation. And the difference between the next 2 dates will always give you the post-incorporation. That's it. It is very clear. provided you correctly write date 1, date 2, date 3. Date 3 place lo date 1 rasi, date 2 place lo date 3 rasi, ala chaste you will never get the correct answer. So when you read the question itself, you should be confident enough to say, yes, this only is the takeover date. Yes, this only is the incorporation date. Yes, this only is the closure of the books date. So ilaga, you will have to first be very confident of what are the answers that you are writing here. And then working out is very simple. Format, anybody will do it. That is not a bigger problem. So the first working note is to identify the time ratio. How will you identify the time ratio? You will have to find out the 3 things from the question. While you read the question, the 3 things that become important are the date of taking over of the business, which is date 1. And then you have the date of incorporation, which is again very important. From which date it has come or it has become a company. And the third date and the last date is the date of closure of the books. Clear? So there are 3 dates that you have arrived. The difference between the first 2 dates will always be pre-incorporation. That is the period before incorporation of the company. And the date 2 and date 3, the difference between date 2 and date 3 will be the post-incorporation period. Now, still this particular concept of time ratio is not over. So you found out time, 4 months of this, 8 months of that. Then what happens or what is very important is understanding or computing the ratio. What is this ratio, madam? So what do you mean by a ratio? Ratio is what? You have the symbol is to, correct? So between 2 things or in comparison between 2 things, what is the ratio? So now when we talk about finding out the time ratio, we are talking about how much time in the pre-incorporation, how much time in the post-incorporation. Clear? Pre-incorporation, how many months we are having? As per this example, it is 4 months. So I write 4 months here in the pre-incorporation. Then I put this symbol and then I write how many months in the post-incorporation? From 1st August to 31st December. Can we count the months? August, September, October, November, December, Jan, Feb, March. So it is 8 months. So we have 8 months here. Clear? And that 8 months will be written here. So 4:8 is the time ratio that we have arrived. 4:8 is the time ratio we have arrived. Whenever you have a number that is divisible either by 2 or by any other number, please reduce it to the lowest factor. So it will be very easy for you to solve. Correct? No? So this 4:8, 8 is divisible by 4. So what do? I divide everything by 4 again. What do? To bring it into a proper thing, I divide it by 4. That is not subtraction, that is division. Okay? So 4 divided by 4 is 1. 8 divided by 4 is 2. So what is the actual ratio? It is 1:2. You might ask me, why madam 4:8 itself is better? Again, I will be doing what? I will be doing 1 minute. Sorry, Dheeraj Jain, pre-incorporation 5 months. How 5 months? It is 1st April, May, June, July. On 1st August, it becomes, or there is getting incorporation. April to July, 5 months. April, May, June, July. Yes, actually now it is 5 months because of the lockdown we are facing the problem. So we feel like it is an increased month. But actually April to July is only 4 months. April, May, June and full of July. So it is 4 months. Clear? So yeah, coming back to our concept, madam, why should I reduce it to 1:2, madam? If I don't reduce or by doing that only I'll make mistake. No. But technically when you're solving a bigger question, it becomes very easy for you to have this 1:2 ratio. And that is very, very important. And it will be easy for you to even do the calculations. Correct? No? So now first thing that we have taken or we have done is what? 1:2, arriving at the time ratio. Is this clear? Yes or no? Okay, good. I take it as it is clear. And then we proceed to working note number 2. Okay. So we proceed to working note number 2. After identifying the time, then you might ask me, what else is needed, madam? All the revenue, all the income, all the expenses, everything I have now. So why should I again go to my working note number 2? All the expenses, I will divide it in the time ratio. Finish. Correct? That is what you will be feeling. No, the concept comes here, wherein It is not only the time ratio. What is the other major ratio that you will have to find out? The working note number 2 will be computation of your sales ratio. This is equally important. What is equally important? Computation of your sales ratio. Clear? Yes. Now, sales ratio. You might ask me, madam, what is there in calculating the sales ratio? Now we know what are the months. So this is pre-incorporation. This is post-incorporation. In the question, we will find out what is the sales given, and then we will divide it by the time. But generally, there are questions given to you in a logical form or in a tricky way, which says the sales, or I'm just giving you an example. It says the sales during the pre-incorporation, the sales during the pre-incorporation was double the time of sales in the post-incorporation. Clear? What is it? I'm just giving you an example. I'm telling you that in the question they might give you like this, as to the sales in the pre-incorporation was 2 times the sales in the post-incorporation, madam. That is what the question reads out to you. So in that case, can you still use the time ratio? Or if you take the total sales is 100 rupees, the question will be given in the question, you will have rupees 100 is my total sales. Correct? So how much is my total sales? Rupees 100. And now what is the logic, or what is the thing that is being given to you? You will have, or it says, in the period of pre-incorporation, my sales was into 2. Correct? During the pre-incorporation period, the sales was double than in the post-incorporation period. Post-incorporation, I just had sales, but here the sales doubled is what they give you. In such case, what you have to do is you have to arrive at the sales ratio. Clear? You have to arrive at the sales ratio. So how will you arrive at the sales ratio? First, you have to understand what is given in the question, which is double, which is half, which is triple, which is 4 times. All that you need to understand. So in my example, I have given you in a simple way, pre-incorporation sales was double the sales of the post-incorporation. So here my variable becomes, let the post-incorporation sales for a month be how much? Be X. When you don't know and when you have any sentence that is given to you in the form of a unknown variable, you then introduce something called as anything X, Y, Z or A, B, C, anything is okay. Since the common parlance is used, we take this X. Clear? So let the post-incorporation sales for 1 month, post-incorporation period, the sales to be X. Clear? So now what will be the pre-incorporation? So I'm always stressing on the word double. So I'm stressing on the word double. So in the pre-incorporation for a month, the sales will be X into 2, which is 2X. Is this clear? Any doubts you have? Clear? This is understood? So when they give you something in the form of this particular adjustments in the question, if they give you something like that, you must be able to understand the logic and then do. Like if in this case, if you do a mistake of taking post-incorporation into 2 and pre-incorporation into 1, your sum will go wrong, correct? Your sales ratio will go wrong. And that will impact till the last end of the question. So that is very, very important. Even the most easiest concepts, when you solve the questions in the examination conditions, you will have a confusion as to what is this, what is that, madam? Oh, I've tried. The only way to eliminate such a confusion and be confident when you solve the questions in your exam, what you have to do? You have to practice. You have to practice a lot. Clear? Accounts doesn't come by reading. I've seen so many people, madam, I studied this concept. I don't still understand how do you study accounts. So what will you study? These are right side, left side, debit is there, credit is there. So you study. You cannot study accounts. You have to work out. So the more number of sums you work out, the more number of grip you get. See, suddenly what happens while you're working out, you take a revision test papers, you take solicitor answers, you take that scan, this scanner. When you work out, you'll be stuck up with one particular adjustment somewhere. You lose the interest in doing the remaining part of it. So don't be like that. If you're stuck up with one point, definitely somebody will be there to help you. So if you don't get it, leave that aside and then start doing the other part of it. Okay, clear? So this kind of mistakes or small mistakes wherein you are not going wrong with the logic can be eliminated only if you practice. Anything comes only by practice. Anything and everything comes only by practice. Clear? So then coming back, once after you get the equation, you have arrived at the sales per month. Correct? You have arrived sales per month. Per month sales in the pre-incorporation period is 2x and per month sales in the post-incorporation period is x. Clear? Now you need to know how many months was there in pre-incorporation, how many months was there in the post-incorporation. So when we take the same example as continuation, I had told you how many months, ma? Pre-incorporation is 4 months, post-incorporation is 8 months. Clear? Pre-incorporation 4 months, post-incorporation is 8 months. This is what is the example that I've given you earlier. So I'm just continuing that. And when I'm continuing, I'm telling you working note number 2 we are preparing. This is with regard to computation of the sales ratio. In order to find out the sales ratio, you might ask me, I told you, why madam time ratio can't we give? You can, not a mistake. But there are questions that will be asked in the exams, not directly. If everything is going to be direct, who's going to give you marks? Or how will you be called as the toughest CA? So no, things will be twisted to us so that when you go into your practical life, it will be very easy for you. This only no, I have studied long. So coming back to that point, we already have some adjustment given to you in the question. Extending my example a little more, I had given you or I have told you that the pre-incorporation sales is double the post-incorporation sales. So meaning what? For a month. So if I have done X is the sales during 1 month of post-incorporation, what will be? 2X will be for 1 month in the pre-incorporation. Clear? Any doubts? So then I've arrived at this equation. Whenever a particular equation has to be formed, you have to consider the variables, unknown variables. So generally, you will be considering it as X and you will arrive at the equation. So here, pre-incorporation sales for a month is considered to be X. Post-incorporation sales for a month is X. And pre-incorporation sales per month will be double. That is 2 into X, which is 2X. Clear? But still, this will not be the ratio. So in order to arrive the ratio, you should know the number of months, right? So I extend the same example here. This is post-incorporation. Post-incorporation is X into 8. So it was 8X during the period. And then 2X into how many months here? Again, 4 months. So it is again 8X. Clear? So since both are in one variable, which is X, the ratio will be again pre is to post, correct? But now here we are talking about sales. So where is the sales arrived from? It is arrived here. How did you arrive at this? First you have considered sales to be X in the post-incorporation. And then pre-incorporation, the same X becomes 2 times. So that is 2X. Clear? Now, pre-incorporation has total number of months. How much? How many months it has? It has 4 months in the pre-incorporation. And post-incorporation, there are 8 months. So we have 8X is to 8X. So since both are coming in X, you can now go ahead and write. Correct? So what will be the ratio? Since 8 and 8, it is divisible again by 8. So divided by 8X again. So it will be 1 is to 1. Now you can ask me, madam, where did the X go? Since on both sides you have X, you can eliminate them. Is that clear? Only on one side X and one more side X is not there, then you cannot equate it. This equation or the ratio happens between 2 equals. So that is how it is arrived. Is that clear? So it should be 1 is to 1. So what it is? 1 is to 1. So you have now understood to do 2 working notes. The first working note is arriving or computing the time ratio, and the second working note is arriving or doing the sales ratio. Now you will ask me, madam, okay, that is all fine. I understood there is something pre, there is something post also. But madam, why should I do these working notes? What is the use? To answer that question, I'll come back to the topic. What is the topic? Profit or loss prior to incorporation, correct? So how do you arrive at the profit? I told you from the P&L account. So what does a P&L account have? It has all the income. It has all the expenses. So the difference between these two only comes as what? Either the profit or the loss. Now, the P&L account that you prepare will have only one column, correct? Because everything is within that year. There is no takeover, there is nothing. Everything is normal, full and complete. So that is how it goes. But here, we don't have that same situation. We are dealing with a peculiar situation wherein, what? What's a peculiar situation? That is also an easy situation, but wherein you've taken over the business and then there is time taken for the business to be converted into a company, but till then you actually had to carry on the business because you didn't want to upset your customers. So there was a period before incorporation, there is a period after incorporation. So technically what happens is your P&L is there now. In your P&L, you will have to show two columns. The amount columns becomes 2. Correct? Why, madam, two columns? Yes, just simply for jolly. No. Why you should have one is what is the pre-incorporation, one is what is the post-incorporation. So generally it gets divided like this, pre and post. So in order to divide for you in the question, together the expenses for the year or for the full period will be given to you. So you are the person who has to identify out of the total expense or out of the total income, what is my pre-incorporation, what is my post-incorporation. So that becomes very, very essential. In order to classify this, the most important workings or the two ratios that you will have to find out is what? First one is the time ratio and the second one is the sales ratio. So now, to make it very, very simple to understand or make you understand in a much simpler way, we can classify to arrive at the profit or loss, we have to allocate or we have to segregate the expenses and the incomes. That is the point. Correct? So in order to segregate and do these particular income and expenses, we are going to arrive at the ratio like what I have shown you. So next you can ask me, madam, on a broader note, from which will I start or where will I start my question? So I hope all of you have understood the two working notes. Working note number 1 was computation of the time ratio. Computation of the time ratio means identifying 3 dates from the question. What are the 3 dates? The starting date, the date when the business was taken over. Date number 2, the incorporation date. The incorporation, the date of incorporation into a company. And the date number 3, which is the last date, that is nothing but the date of closure of your books. Clear? What is it? The date of closure of your books. So the difference between the date 1, date 2 becomes your pre-incorporation period. Difference between date 2 and date 3 becomes your post-incorporation period. So the total period is date 1 minus date 3. Simple. So you have arrived at what is the time ratio. And second, you don't stop with that, you go to the sales ratio. Generally, it can be divided in time, but why do you do sales ratio also? I will tell when we learn further. So sales ratio will not be given as a direct thing in your question. There will be some particular twist or there will be some particular adjustment type of thing given to you. Like in our example, I had taken the pre-incorporation sales is twice the post-incorporation sales. So what do? I take sales to be the unknown variable, which is X. And the sales during the post-incorporation is X. And then the pre-incorporation is twice that. So it becomes 2 into X, 2X. So will you stop the question? Will it be X is equal to 2X, 1:2? No. Very importantly, you will have to, what do? What do you have to do? You have to multiply with the number of months. So continuing my previous example, I multiply X is post-incorporation sales. How many months in post-incorporation? 8 months. So X into 8 is 8X. Pre-incorporation 2X is the sales into how many months? 4 months. So 2X into 4 is again 8X. So 8X is to 8X, which is nothing but 1 is to 1. Clear? So 1 is to 1 ratio is the sales. Now we go further. Why are we finding out all this, madam? Obviously, we have to find out all this, my dear students, because you will have to ultimately arrive at the profit and loss. And what will be given in the question I told you? the complete or the entire income and all the expenses will be given to you. It is you who has to identify this expense should be given in which ratio, or such other expense has to be given in which other ratio. It is you who will have to take the call. Is that clear? Any doubts? So we go ahead. We are now going to do the segregation of the income and the expenses part. What are we going to do? Segregation of the income and expenses part. Yes. Now, the first or the starting point for this kind of a problem will always be from your gross profit. What is this? Gross profit. What do you mean by gross profit? Gross profit is that profit arrived before charging all your indirect expenses. Or in a simple understanding, from the trading account, whatever is the particular profit that you are arriving as the balancing figure, that is your gross. And once after you take it into the P&L starts from your gross profit, correct? You provide for all the indirect expenses and you also take into account any indirect incomes, and then finally you arrive at an answer which is the net profit, correct? But in this kind of a problem, when you're starting to solve a problem, what is important for you? Gross profit. So you will have to start the question with arriving at the gross profit only. Clear? So to arrive at the gross profit, how many formulas can you think of? How many formulas can you think of while arriving at your gross profit? So there are so many formulas that you can think of, but the main thing that will be used is, first one is gross profit is like sales into gross profit percentage. That is the basics that you have learned till now. How will you arrive at the gross profit? It is sales into gross profit ratio or gross profit percentage. Clear? Yes. And what is the other? Suppose if net profit is given in the question. If net profit is given to you in the question and they are asking you to arrive at the gross profit, what will you do? Net profit is given to you in the question. Correct? How did you arrive at net profit? First think of that formula. How did you arrive at net profit? I took the gross profit from the trading account. I added the indirect income. I subtracted all the indirect expenses and then I arrived at the net profit. Correct? So the formula is what? How did you arrive at net profit? Gross profit plus indirect income minus direct expenses. Correct? So this is your net profit. Now please do the reverse. From net profit, you want to find out what is the gross profit. So what you have to do? You have to reverse the formula. Your net profit plus what? Direct expenses. What you have subtracted here, you have to add back here. So all the expenses you have to add back and you have to subtract the indirect income if any. Clear? And you have to subtract the indirect income if any. Is this clear? What is very important, or how do you start the question, is of finding out what is the gross profit. Correct? Is how you find out the gross profit. The gross profit can be found out in two ways. The first method is from the sales. Sales into the gross profit percentage gives you the gross profit figure. Or you can also find out gross profit from your net profit. How will you find out? The formula for which is very, very simple. Net profit plus the direct expenses minus the direct income. So how did you arrive at this formula? Generally, how do you prepare your P&L? From gross profit, you go to the net profit. So I've done a reverse of it. That's all. Is this clear? Any doubts you have? So the first starting point for any question will be from your gross profit. So calculation of the gross profit can be done in these two methods. Clear? Now, okay, madam, gross profit I have identified. Question I have studied very well. Whatever you have told, I've used one of the formula, I've arrived at the gross profit. Now tell me, madam, in which ratio the gross profit has to be allocated? Good question. That is what is our crux. So gross profit can be allocated in 3 methods. What it can be done? The gross profit can be allocated in 3 methods. The first preference, gross profit should be allocated or divided based on the sales ratio. Now, do you understand why did I do the sales ratio? Because your starting point of any question will be with the gross profit. And the gross profit cannot be given or substituted directly with a particular ratio. There is a format that is given to you. The first preference will be to sales ratio. If sales ratio is directly available to your question, please go with the sales ratio. Clear? Gross profit to be allocated in the sales ratio. If sales ratio is not given in the question, what? If sales ratio is not, you cannot compute it from the question at all. There is no information. So what will you do? The second preference goes to cost of goods sold ratio. I heard this somewhere, madam. Cost of goods sold ratio. What's cost of goods sold? That is the second preference. What is cost of goods sold? Again, when we go, there is one formula for cost of goods sold. Opening stock plus purchases plus direct expenses minus the closing stocks. That is your normal formula. But instead of memorizing the whole formula, the simple way to understand cost of goods sold. That means what? You have sales. So cost, okay, cost of manufacturing this pen is 10 rupees. Will you sell it at 10 rupees? Definitely no. If you're a pakka businessman, you will not sell it at 10 rupees. You will be selling it at, I'm a reasonable businessman, I'll sell it at 12 rupees. Okay. So what happens? Cost of producing this particular marker is 10, but I sell it at 12. So what is the profit that I'm making? 2 rupees. Clear? So this is also the same. Sales is 12, cost of goods sold is 10. Then what did I do with the 3? That is the profit. So cost of goods sold can also be computed in 2 formulas. The first formula is one which you have been studying the age-old time till now. Opening stock plus purchases plus direct expenses minus the closing stock. Or otherwise, the other formula, as of now, I told you, 12 minus 2 rupees, that is 10 rupees. That is your sales minus the gross profit gives you the cost of goods sold. Is that clear? Now, in the question, madam, sales also not there. Cost of goods sold also is not there. Then what do? Gross profit, shall I leave it as such? No. Then what they say is, okay, nothing is there. What you can also do, what I can also do. Go with the time ratio. Is that clear? Go with the time ratio. This is your third preference. But till whatever I've seen the subjects or whatever questions that have been given, they don't allow you to go even till cost of goods sold also. Sales ratio will be there in every question. You will have to compute the sales ratio, and after that only you can go ahead. So your gross profit technically will be divided in the sales ratio. If sales ratio is not there, cost of goods sold ratio. If cost of goods sold also is not available, you will have to take it down in your or split it in the time ratio. Clear? Any doubts do you have with this? So then, madam, okay, we are all talking about the income part of it. Now come to the expenses. Correct. Good. Now, when you talk about expenses, it is not like only one line of expense you will have. There are different forms of expenses that you are having. Correct. Now, I would like to make a flow chart for you to understand all the expenses. So, the first type of expenses are fixed expenses. What are they? Fixed expenses. Now, don't get confused with your costing, your fixed overheads and all that. It's a very simple understanding. Fixed is something that will remain fixed. That is, with the time it goes also, it is fixed only. Second kind of expenses are variable. Variable means it keeps moving here and there. It is not standard. It is not fixed. Correct? So now when I talk about fixed expenses, those expenses which are fixed to be incurred in relation to time. Correct? Fixed expenses are those expenses which are related to time are called as fixed expenses. Can I give you examples for your better understanding? Salary, rent, electricity, depreciation. This becomes very, very important. So these are all the examples. These are all the examples for the fixed expenses. These are all the examples for the fixed expenses. Are you able to see till here? Salary, rent, electricity. These are all the examples of the fixed expenses. Okay, these are all the examples of the fixed expenses, which means fixed in relation to time. Each and every month you have to pay salary? Yes. Each and every month you have to pay rent? Yes. Each and every month you have to incur, or there will be depreciation on the machineries or the assets that you're using? Yes. So when that is going to be the case, then what you will have to do? All this have to be given in which ratio? Fixed expenses always to be divided or classified in the time ratio. Fixed expenses to be derived or to be cleared in the divided in the time ratio. Clear? Now we come to the variable expenses. What are variable expenses, madam? Variable in relation to something. What is that something? If I do sales, I will have so much expenses. So those expenses which are related to what? Which are related to sales. They are all variable expenses. Variable expenses are those which are related in relation to sales. Clear? So that or those kind of expenses should be divided in which ratio? Sales ratio. They all have to be divided in which ratio? They have to be divided in the sales ratio. So we have got 3 understandings or 3 learnings out of this. So what did we start with? First we made the working notes, correct? So in the working notes we understood how are you going to compute your time ratio? How are you supposed to compute your sales ratio? After understanding that, madam, I have to use this somewhere, right? So where is that? Please tell me. So then we have come to the segregation of the income and expenses. So yes, you all have found out good, correct? But next you have to apply this ratio on something so that you will be able to arrive at what is the profit or what is the loss. So what will be given to you in the question I told you? Total income for the entire period, total expenses and things will be given to you in the question for the entire period as such. So when that is being given to you, what you're supposed to do? Classify it into pre and post. That is your entire topic about, correct? How will you classify? So you need to understand what are the different kinds of the expenses and incomes which will be coming in the question and how you are supposed to allocate them. That is the point. Clear? So in every question, your starting point will be from your gross profit. So how do you arrive at the gross profit? If it is given to you straightly in the question, well and good, super. If it is not given straightly to you in the question, I have told you there are 2 formulas to arrive at the gross profit. Formula number 1, a very simple formula, sales into the gross profit percentage. So that is your gross profit. That is your first formula. Second formula, no, I'm not able to do this. The question tells net profit. So net profit is given to me, madam. How do I arrive at the gross profit? Very simple. Net profit, add up all the indirect expenses and subtract the indirect income. What is the resultant answer? It will be the gross profit. So after identifying or arriving at the gross profit, you have to divide it. The gross profit belongs to the total period. I have to now find out how much gross profit for the pre-incorporation and how much gross profit for the post-incorporation. So how do you do? The first, there is a series or the sequence of the ratios that you have to follow. First, always there you have to divide gross profit into sales ratio. If sales ratio is not given in the question, you are unable to calculate, go to the cost of goods sold ratio. How do I find out cost of goods sold? Your next question, you have a formula which is opening stock plus purchases plus direct expenses minus the closing stock. Or there is another formula, sales minus gross profit also gives you the cost of goods sold. If in case in your question you are also not able to find out the cost of goods sold, what should you do? Go to the time ratio. I give up on everything, finally go. I will do it in the time ratio itself. So that is the thing. But as far as whatever questions we have seen, don't worry, sales ratio will be there given, twisted all much complicated thing will be there or given in your question. Is that clear? And then we went into expenses. So the income part is clear. So apart from this, you can't have any other indirect income. So it will be gross profit, which will be taking care of all the incomes in that. And then now I go to the expenses part. The expenses part, how do you classify? So you will tell, madam, so many expenses are there. Everything I'll give it in the time ratio. No. The expenses themselves get classified into two things: fixed expenses and variable expenses. What is fixed, madam? Fixed, those expenses which are fixed with time. Every month I have to incur certain expenses, irrespective of doing the production or doing the business or not. The examples of which are salary, rent, electricity, depreciation. So they are all fixed expenses, irrespective of I do the business or I don't do the business. It's not their problem. I have to pay everything. So such kind of fixed expenses have to be allocated in the time ratio. That's your working note 1. Correct? Working note 1 lone kada you have found out the time ratio. So that you will have to divide it. Now coming to variable. Variable with what? Variable with sales. What are the examples? I was actually talking that this will be divided in the sales ratio, but nobody like, okay, it's okay, fine. variable expenses. What are all or what are possible variable expenses? Very, very simple in relation to sales. So you have selling commission, correct? Selling commission, selling and distribution overheads, advertisement expenses, and bad debts, correct? So these are few of the examples of those expenses which are related or in relation to the sales. Like your selling commission, if you have to pay any to the agent. Selling and distribution overheads. What are selling and distribution overheads? For marketing the product, all that you will have to incur certain expenses. So they are selling and distribution overheads. Advertisement charges. Any bad debts. When will you get bad debts? Only if you do sales and the person fails to give you back your money, then it becomes a bad debt. So even in that kind of an expense, since it is related to your sale, it will come under variable expenses in relation to your sales, and it has to be divided in which ratio? It has to be divided in the ratio of what? Sales. Clear? Gross profit will go in the sales ratio. If sales ratio is not there, cost of goods sold ratio, if cost of goods sold ratio is also not there, then you will have to go with the time ratio. That is with the gross profit, that is the income part. The next part is expenses. There are not one expenses, there are different kinds of expenses. So the expenses can be broadly classified into, it can be classified into fixed expenses and the variable expenses. So fixed expenses are those which are fixed in relation to the time I have to incur. So such kind of fixed expenses shall be classified or can be divided or allocated on the basis of your time ratio. Variable expenses are those which vary with the sales or the quantity of sales that you do. So that case, what happens? You have to divide them or you have to allocate them in the sales ratio. Clear? Any doubts that you have till this? Okay. So then we proceed. The other type of expenses. So we have seen fixed expenses and the variable expenses. Now what happens is there are certain expenses which are fully or which will be fully coming in the pre-incorporation. And there are certain expenses which will be fully coming in the post-incorporation. Can we have examples of it? Can we have examples of it? Anybody? Okay, so I will give you example myself. Expenses we have pre-incorporation, which will completely come into pre-incorporation, and those which will completely come into post-incorporation. Okay. When we talk about which will fully come into post-incorporation, so I can tell you. So once after a company has come into existence only, you will be appointing a director, correct? Managing director, executive director, whatever. So you will have a director only after the company has come into existence. So if in the question, the extract, you find director's fees sitting in the question. What do you find? Director's fees sitting in the question. Without any second thoughts, you have to immediately understand director can be there only after a company comes into existence, not before that. And hence put the director fees entirely into post-incorporation. You put the director's fees entirely into the post incorporation, because you will have him only after the company has come into the picture, correct? Without company coming into the picture, how will you have the director? So you shouldn't have doubts of where the director's fee should come or in what ratio should I divide. So there will be mistake where you can make in urgency. There's a silly mistake wherein you will start dividing the director's fees also. Okay, director's fees, chalo, time, relation to time, I will divide. No. In that case, the thing becomes what? In that case, what it happens? It becomes a problem. It becomes a mistake. Clear? So, director's fees is a completely post-incorporation thing. Correct? Now, the next is preliminary expenses. So, what do you mean by the preliminary expenses? Tell me what you mean by the preliminary expenses. So, yeah. Oh, brilliant. Okay, brilliant. So everybody is answering it. So coming back, so we have the preliminary expenses. So why should you take preliminary expense? I will tell you. Preliminary expense is something which you have incurred for the purpose of formation of the company. Clear? You have incurred for the purpose of formation of the company. When you have the idea to create a company only, you will be incurring such kind of an expenses. So always your preliminary expenses will be considered in relation to the company that is going to come into existence. So preliminary expenses also will come as a part or completely into your post incorporation expense only. Clear? Good. So I can see a lot of answers that's coming up, and that is very interesting also. Thank you guys for being at least participating, so that I know that somebody is actually listening it too. Okay, good. Now coming back, apart from this, after a company has been registered and it comes into existence, it becomes very important to raise capital, right? I can raise capital, like I am the director of the company or I am a promoter, I can pump in whatever money. Say that I am a crorepati, so I pump in so much of money into that. Good. But even then you need money. So what happens? The other sources of income, once after a company has been started, can be what? By the issue of shares or by the issue of debentures. Clear? Only a company can issue shares or it can issue debentures. Please make that very clear to you. So in case they have given any expenses in relation to such securities, for example, the debenture interest, for example, they have given any expenses in relation to shares, underwriting commission, all this will be taken completely into your post-incorporation period. Is that clear? So post-incorporation, we have director's fees, we have preliminary expenses, and all the expenses, bear with my scribbling, expenses related to securities, that is issue of securities. Any expenses which is related to the issue of securities such as shares and debentures will be coming here totally in the post incorporation, because a company only can issue the securities such as shares and debentures. Clear? Any doubts? So what can be the expenses? It can be underwriting commission for shares. It can be debenture interest in case of debentures. Is this clear? Any doubts you have? So, do you have any doubts with this? Pre-incorporation. Now we come back to what are the expenses which purely belong to the pre-incorporation period. So, pre-incorporation period as such will be specified in the question. It will be question specific. Okay, it will be question specific. So when we come into the working of, or when you read a question, it will be exclusively given that a portion of this particular expense, that is total expense, will be so much. A portion of that completely it belongs to the pre-incorporation will be given to you in the question itself. Where in such case, so it is a direct one, it's a direct adjustment, nothing is required for on your part to be done. So it's very simple and it can be done very easily. So all those expenses will be classified under the pre-incorporation period. Is that clear? So what and all we have seen? We have seen the differentiation, or we have seen the gross profit. Gross profit getting divided, or it has to be allocated as per your sales ratio. If sales ratio not there, as per your COGS, which is cost of goods sold. If cost of goods sold also is not there, then it should be given in the form of or it has to be allocated on the basis of your time ratio. Clear? So this is the preference of division or allocation of the gross profit for your pre-incorporation and post-incorporation. And then when we talk about expenses, we have only spoken about profit. From the profit, you have to deduct all the expenses to arrive at your net profit. Correct? So gross profit, if it is your starting point, the expenses have to be deducted. So what are all the expenses, or how can you classify the expenses? For easy understanding, the expenses can be classified into what? Fixed and variable. What do you mean by fixed? Fixed are those expenses which are fixed in relation to the time. So in spite of doing the business or not, you are supposed to incur such expenses. So they are fixed expenses. Such expenses will be allocated in the time ratio. And second point are the variable expenses. Variable expenses are those which are in relation or incurred in relation to the sales. So such kind of expenses will be allocated in your sales ratio. Apart from that, now the next classification of the expenses, as you can see on the board, is those expenses which completely belong either to the pre-incorporation period or those expenses which completely belong either to the post-incorporation period. That becomes very important. So what are they? In pre-incorporation, generally it is a question specific. In the question, it will be given as a part of the total expenses. This much part, it belongs to the pre-incorporation. So in that case, it is a question specific, which you will have to consider it that way. If not, for post-incorporation, you have few examples which are specific, like director's fees. Only after a company comes into existence, these kind of expenses will be incurred, which is implied. So when a director's fees is given in the question, you cannot take it into pre-incorporation. You should put it under post-incorporation entirely. Then preliminary expenses. Why, madam? Preliminary expenses also before incorporation only, no, madam. So what is your logic? No. Preliminary expenses are those expenses incurred in relation to formation of a company. Correct? Pre-incorporation, there was no company at all. It was from one form that I have undertaken and I want to convert it into another form. So that only is there. So pre-incorporation and the preliminary expenses are two different entire concepts. So preliminary expenses, that is where we have doubts. So you will make silly mistakes. Preliminary expenses, chalo, put it under pre-incorporation. That's all, some ho gaya. So it is not that way. Pre-incorporation and preliminary expenses are different. So preliminary expenses should come under, or it has to be combined with the post-incorporation period. Clear? And apart from that, only a company can issue securities in order to raise funds from or in order to get the sources of funds. So different sources of funds by the issue of different types of securities. Any expenses in relation to those securities will also come here. Like shares and debentures can be issued. Underwriting of shares and the debenture interest is one, are the expenses which are directly or indirectly related to this. Is that clear, everybody? And apart from this, and after understanding the general form of the expenses, there are two specific things that I have to teach you. And with this, we are comfortable enough to go into the questions. That's it. That's all. So very easy, right? Pre or post incorporation. Easy or not? It will be easy. But once when you start doing the questions only, you will face the different kinds of problems only. Then you will start understanding what it is. Clear? So the next one, which is actually peculiar, or the two important or the different kinds of thing that is given, is the audit fees. Correct? What is audit? Audit fees, very favorite subject, because we as auditors, when we go, we have to get the fees for doing whatever it is. So the audit fees again is classified into company audit and the tax audit. Okay. Company audit and the tax audit. The part of this audit part you will read in auditing, so that is not relevant. So the audit fees can be given for two things. One is for the company audit and other is for the tax audit. So the company audit fees should come where? Now, can you use your logic and tell me the company audit fee should come where? It has to obviously come only after the company has come into existence, right? Only for the company you're doing an audit. So obviously it will be completely taken into post-incorporation period without any doubts. Is this clear? It will be completely taken into post-incorporation because it's a company. You get audited, then that audit fees that you pay should come into the post-incorporation. And then the tax audit. So tax audit is something you are doing an audit to determine the amount of tax you will have to pay. So the tax is on all the revenue you incur, correct? All the revenue you earn all the expenses you incur, what is the profit? So for the total period, your tax audit will be covered. So in that case, the tax audit should always be divided in the basis of your time ratio. Oh, okay. I think people have started answering me. Okay. So coming back, okay. When I talk about this, when time ratio tax audit is being calculated, the other way of looking at it is even sales ratio can be used. The problem or the entire point in this is tax audit basically deals with the entire number of fees. Yeah, entire number or the all the months put together or for the entire period you conduct the tax audit. Okay, here also you have the preferences. Generally, tax audit can be classified or the first preference will be given to the sales ratio. If you don't have it, you can also take it in the time ratio. Here, so the tax audit will be on the sales ratio on the first preference. On the second preference, if the sales ratio is not being or not able to be computed, you can take it in the form of your time ratio. Clear? So this is one point or this is one expense where you will have to carefully look into the question. Audit fees, if it is given on a general term, generally it will not be given on a general term. They will specify it out of the audit fees. So much belongs to the company audit and so much belongs to the tax audit. So the company audit directly goes into post incorporation. And in case of the particular tax audit fees, the tax audit fees generally is based on the sales ratio. If it is not there, then you will go with the time ratio. Is that clear? This particular audit fees. And then we have this. Apart from the audit fees, interest payable to the vendor. Who is this vendor? Vendor is some person who sells, correct? So here when we are talking about in this context, when you talk about a vendor, who is a vendor? It is the business, it is those people who have given you or you have taken over their business, correct? So generally when you talk about an acquisition, okay, an acquisition, so to acquire a running business, obviously he will not give you free of cost. If you want to acquire his business, it means that the business is doing good and you also want to get it, correct? So technically you will have to pay some amount to him to get that business. So that some amount is termed as purchase consideration, correct? It's so simple. You have to give money to take his business. So that money that you pay to him will be called as purchase consideration. Now what happens? As we have seen, there is a time lag. Business is taken over on a first date, but the company actually comes into the books or comes into existence at a later date. So what happens is sometimes once after the company is incorporated only, this person will be given his purchase consideration. That is the money he says, okay, once after the company is incorporated, in the company's name, I'll pay you back. Correct? So for that particular months where his business is taken over by you and you are running and taking all his expenses and all the incomes that he would have otherwise had, will he be quiet? No. So he will ask you to pay interest on the same. Correct? Now, if that money, if he had in his hand, he will put it in the fixed deposit on the interest and go. My money is held with you and you don't end up paying me money also. So what you do? Give me the interest also. So one other peculiar and the last adjustment that they can ask you is with regard to how will you classify or on what basis will you allocate the interest payable to the vendor on the purchase consideration. For this, I'm telling you, separately this particular adjustment in your question, you will have some or the other word or a sentence mentioned about it. So they will tell you what they will tell you. They will tell you very clearly that the purchase consideration is settled on a particular date. So what they will tell you, purchase consideration is settled on a particular date. Technically, purchase consideration will be settled when? After the company has come into existence, correct? So you will have to take that period and see how much of it is in the pre, how much of the other months are in the post, and then you will have to do an allocation. So the one and only part wherein a different ratio altogether will be computed, that too from the details given in the question, is your interest payable to the vendor. So what it is? Interest payable to the vendor. So did you understand what is interest payable to the vendor? You can't free of cost take somebody's business snatch and keep doing your own business, right? You have to pay him. So the amount that you will have to pay to him will be termed as the purchase consideration. Sometimes it so happens that the purchase consideration can be delayed, and once upon the formation of a company, you can settle the purchase consideration. So in that case, what will happen? You will have to estimate the total months for which the interest was paid. Okay, and out of those months, how much belongs to the pre-incorporation, how much belongs to the post-incorporation will be clearly given to you in the question. So based on the question, you will have to arrive at that ratio, and based on the question specific ratio arrived, you will have to allocate the interest payable to the vendor. Is that clear? So when I give a fast recap, the first thing that we started was, how are you going to segregate the income and expenses? In your question, there will be complete income and the expenses given for the entire period. So it is your responsibility to find out what amount of the income or the expenses are belonging to pre-incorporation, what amount is belonging to the post-incorporation. So for which what you will have to do, you have to start working out. So you will have to understand in what ratio you will have to do. So the first thing you have to start working out is with the working notes. The first working note that you will have to do is the computation of the time ratio. Second working note that you will have to do is the computation of the sales ratio. After finding out these two ratios, it is equally important to know what expense and what income should be segregated or allocated on what ratio basis. So for that, we had a brief segregation of what could be all the possible incomes and the expenses here. And we have also seen in what ratios we'll have to give them. The gross profit is generally given in the allocated in the sales ratio. If it is not available, the cost of goods sold ratio is taken. Even if cost of goods sold ratio is not available, then you will have to do it in the time ratio. Clear? So that is how you will be allocating gross profit. The next point is with expenses. There can be different expenses. So broadly, we classify expenses into fixed expenses, variable expenses, post-incorporation expenses, pre-incorporation expenses, and these two which are peculiar. Fixed expenses will be allocated or divided in the time ratio. Variable expenses will be allocated as per the sales ratio. And then pre-incorporation, which will be generally question specific, and you have to take the entire amount or whatever is the amount given to you in the pre-incorporation period. Post-incorporation expenses are those which belong purely to the company once after the formation of the company. So you have to be shrewd enough to understand what are those expenses related only to the company which will not come in the pre-incorporation, and take it completely to the post-incorporation. And last but not least, we have the two other things which are audit fees and the interest payable on the purchase consideration to the vendor. So when you talk about the audit fees can be for the company audit or for the tax audit. So company audit fees is generally only after the formation of a company. So it will be post-incorporation. And the fees, in case of a tax audit, it is based on the turnover, because profit and loss is determined only on the basis of your turnover as well as the expenses, and hence it will be divided in the or allocated in the sales ratio. And the final adjustment that you can have is this: interest payable to the vendor. You have to pay the purchase consideration to the vendor. If you pay the purchase consideration at a later date, he is entitled to claim the interest from you. So how will this interest on the purchase consideration be classified? You will have to read the question for that case and identify how many number of months in total till when the interest or the purchase consideration is settled. And in that months, you will have to again classify how much in the pre-incorporation and how much into the post-incorporation. So all this summarizes your step number 1 of finding out what is the profit or loss in the pre-incorporation and post-incorporation. And finally, to sum up, we will have to understand the point number or the step number 2 that you have to do. You have identified, correct? So you have identified based on this particular ratios, based on the income, expense, everything you have classified, you have put the statement, and then you have written gross profit starting, all the expenses. So you have understood the question, you have identified what are all the expenses, so which in what ratio also you have done, everything is perfect. Now comes the step 2 as to What or how should you show this? That becomes very, very important. You identifying and doing is okay, but implementing or bringing that into your normal life is very important. I told you in the beginning. So then we come into the step number 2. Post incorporation profit or loss is the normal profit or loss, correct? Which you will be adding it with your general reserve and you will show it into your balance sheet. That is the transferred, whatever is the balance that is transferred to the balance sheet. That remains intact. Clear? And that is your P&L amount that comes and it remains intact. Clear? Now when you talk about pre-incorporation, you can either have a profit or you can either have a loss. Correct? If I get profit, madam, where will I show? That will be the question. So I have arrived, I've done everything, whatever working notes you told, everything I've done, madam, I have arrived at profit. This will be considered as a capital profit and it will be taken to the capital reserve. One way of showing this, or the general way or the common way of showing this, is to take it to the capital reserve. Clear? So you take it to the capital reserve. But in case, for example, in the question, you have goodwill given in the question already. Generally, they will not, but if you have goodwill, or for your practical purposes, tomorrow you go to a company. When you do this kind of a thing, you get so much of capital profit, like pre-incorporation law, you are getting a profit. Then what you can tell, sir, already goodwill is also there. Why will you get goodwill? Tell me, or how will you get goodwill? The purchase consideration concept I was talking about. No? So when the person assets are less, because if you take over a running company or a running business, so it is always assets also will come, liabilities also will come. When your assets are more, correct? When your assets are more and liabilities are less, that is, you technically pay more for a company based on the goodwill. They have a good brand image, so even if their expenses, like your liabilities are more also, they take over the company. That means it is a loss for me, but technically not a loss. You paid more to get that business. In that case, it will be a goodwill, correct? So if you get a goodwill in that kind of a case, then this capital reserve, the profit from pre-incorporation, can use to be writing off that particular goodwill to that extent. Clear? Whenever you get a profit, pre-incorporation profit, the first thing or the general thing that you will do is the transferring that amount to the capital reserve. But even otherwise, you can do it in the other way, wherein you have a goodwill which is there in the question. You can write off to the extent of that particular profit. Is that clear? Any doubts you have? Okay. Now coming back to the loss. Madam, how will I show it to the loss? Very simple. Take it to the goodwill account in your balance sheet, or you can also take it to a separate account called as loss on pre-incorporation, which will be shown in your asset side of the balance sheet. Clear? So the pre-incorporation, everything will be taken to your balance sheet. If it is a profit, it will be coming to the capital reserve. And if it is a loss, it will be going to the goodwill, which is the general way of doing it. Okay. But in the capital reserve, when you get a profit, already you have a goodwill in the question that is given. You can write off the goodwill till that extent. And the remaining, if you have still profit, you can show it as capital reserve. Or after writing off the goodwill, the profit is not there, so the goodwill gets reduced, and even then the effect will be the same. If you are going to get a loss, you are going to show it under the goodwill account, or you can also show it under a different account that is called as loss on the incorporation. Is that clear? So this session 1 of the pre and post incorporation, the profits or losses. So I have covered up till I've given you an entire gist, an entire brief about what it is and how it can be done. So this is the explanation part of it. So what I would like to do is, by tomorrow's session, the next session of whatever the hours it's going to be, we have 6 illustrations. So I told you I'll be going with the ICI material. So I'll be teaching only from there, those things. So since this link is already shared with you, even tomorrow we'll be sharing the link. So I would like all of you to open, and I'll be going through the illustration. So I hope everybody will be in sync with me, so that tomorrow it becomes very easy for us to solve. It is only tomorrow where I will be solving an entire question and I'll be showing how it will be coming. So all the questions that you will be doing as and when like we are working out in the class will give you a much wider aspect to how actually you will have to solve the questions, because whatever you have learned is always theory. Whenever you start doing it practically, only you will start getting doubts, and only then it will be easy for either you or me to build confidence and develop it from there. So I think tomorrow or in the next session we'll be able to finish all the 6 illustrations, and that is very good thing. And then from the next session we'll be going on with accounting for bonus issue. So I thought of taking the chapter 5, the chapter 6, and then your preference shares, debentures, and then finally come to chapter 4. So we'll see how the time permits. So in case any other like chapters which you want me to like discuss, you can put it always in your comments or your this, so that I'll be able to like see if I'll be able to cover it within my time. Yeah. Okay. Thank you for today's session. Thank you all.